Hey guys, this is Julie, J Auto Trading Strategies. Good afternoon. Want to talk to you about people taking their money out of the banks right now and parking them into money market accounts. The inflows have been dramatic over the last week. You can see that the dramatic nature. We're already past 100 on our axis and spiking up as people rush to get their accounts that are valued over $250,000 uninsured bank accounts and putting them into money market accounts. And I want to show you this is not a good idea. First, because money market accounts are uninsured, right? Just like the bank account. And second, money market accounts invest in short term bonds. So not only are people moving from one uninsured account to another uninsured account, they're doing so at a time when that second uninsured account is losing value. So this is a ZT is a 2-year treasury and treasury bond, and this shows you that the price is skyrocketing and the yield is falling. Not the right time if you're trying to, invest in a bond. You'd want it to be dropping in price and the yield falling. Instead, yield rising, and the right now the price is rising and the yield is falling. So it's not the right time. So instead, what I'm proposing that people should do is open an account at Interactive Brokers and then use a NinjaTrader platform with your Interactive Broker account. And there's a bridge that you can connect your NinjaTrader platform to use with Interactive Brokers. And that way you can sell options, sell premium, and use the JATS PT indicator to provide you those levels of where to place your premium, selling the calls and selling the puts for these strangles. And why do I propose strangles? Well, it's because you can keep the premium without any worries for delta, gamma, theta. And if the contract expires inside the lines, right, you keep the premium. That's it. I mean, there's no delta, theta, gamma, whatever. If it's inside your lines when that contract expires, you keep the premium. So what would that look like currently? Well, first, you can see we're in the middle of the new distribution for the June 16th quarterly expiration. And if we go back through the history of price, you can see how even through 2022, price stays inside these lines pretty well, except for COVID. There are events, extreme events, where everybody calls the broker and said, "Get me out of my contract." Well, you would have your own, you know, Interactive Brokers account. You could close the trade yourself and get it out. But otherwise, as this distribution shifts, the way I can show you how to do this, we can roll the contract, sell another strangle, or sell another call or put to earn additional income to offset that variance should the distribution shift. So in 2022, you can see that they were selling the market off, which was a purposeful thing that the Fed did. But you can see how the 50-day went below your 90-day, and you would just sell another spread and then collect that second premium to offset any difference. But these spreads stay between these lines, 50-day and 90-day is my formula. And so I can go over to, just for an example, my strangle that I put together selling the 3430 and 4650, which right here, the 3438, so 3430 just underneath it, and 4629, 4650 just above it. And on the detail, you can see that we earned $49.84. So you would use a multiplier of 100, and that's $4,984 for one contract. And that would be for the 3 months, getting you to June. The margin required is 8,971. So that represents a 56% return. You're earning 4,986, and you're using 8,971 as your basis. 56% return on income. If you have a $250,000 account and you wanted to use all of that, you could take your $250,000 account, divide it into the margin required. You could put 27 contracts on instead of one. So if you multiply your 4986 times the 27, you would have $134,622 in income for 3 months. So on that $250,000 account that was just sitting there, you could earn that, you would go from 250,000, 134, 622, you would end up with 384, 622. So 250. There we go. So your account just grew. It's Regulation 1256, which means that you're also saving money by trading the ES. You get 60% of that taxed at capital gains and 40% at ordinary income. So my suggestion is to consider, instead of going into a money market account getting barely anything, is to think about using these brokerage accounts, measure the volatility, that's what JATS-PT does, and sell these puts and calls yourself. Now, again, if it challenged your side, you need to sell more premium. So you would not want to use 100% of your margin for any one trade. You would probably want to use half of that so that you could have the other half to sell additional premium on to offset the difference if that contract changed at the distribution. And you can, be monitoring that on a daily basis and sell additional premium to offset that difference. Or you could just close the contract and keep whatever premium you've collected at that point. It's totally liquid, meaning you can cancel the contract and close it at any time. You're not locked into a full 90-day term. You can close it at 60 days out of that 90 days and keep the premium collected up into that point. Okay, you're not forced to sit there and have to hold it until the end. And you can transfer money, it's totally liquid, from your brokerage account to your checking account through wire transfer 24/7, right? So you are totally in control of your own funds. So something to consider, using JATS-PT to measure the volatility and then selling puts and calls yourself. And like I said, I mean, the ES is the most liquid market in the world. All the institutions trade it, and they trade this 90-day distribution. JATS PT measures the volatility. These are not back painted. This is exactly where the volatility is. You're seeing the market go to the volatility and turn around. And it's something, that you may want to consider being able to do for yourself, especially if you're in a position where you have to move your funds out of a bank account that if you got something in Credit Suisse or something like that, you may want to move it. But manage your own funds is what I'm trying to say. So definitely worth investigating and being able to take advantage of the capital markets and realize that there are contracts that these institutional traders use and trade like a pro, right? Be a quant. All right. Thank you so much. Y'all have a great day.